All right, we're live. For those, if you're joining us today, if you throw into the chat, first of all, can you hear us? Can you see us? All four of us. Maybe share where you're from. We're from, actually, we have a little bit of geographic distribution today. Andrew Gaucher, where are you?
Kelowna, British Columbia.
Kelowna. Emmanuel?
Vancouver, British Columbia.
Cindy?
Chicago, Illinois.
All right. And I'm from San Francisco. We're going to give folks a minute or two to join here. We're going to start today's webinar by walking through just a very short presentation that will give us some framing for what we're going to learn today. So I'm going to share my screen in a second here. Welcome from Washington State. I think I know who that is. It's not my parents. I am from Seattle. They probably want to know what's going on today. This is going to be a fun combo. And then we were just discussing, but we have kind of we're going to introduce some businesses and some approaches to technology and service and other things that we think are really valuable for anyone kind of thinking about hospitality and real estate right now, especially coming out of COVID. A lot has changed. And there's a lot of new things that are going on. So we're going to focus we're going to do deep dives into a few businesses today. We're going to ask some general questions about technology and services and other things people are seeing. And then we're going to try to let everyone go at about the 45-minute mark. We might go a little longer. We might go a little shorter. That's what we're going to aim for today. So we'll give one more minute and then give one more minute for folks. At 12:03, I'm going to dive into a rapid presentation. If today you hear something interesting or valuable, exciting, and you have a question that comes up, add it to the chat. We've got teammates standing by. They will try to get it to me to ask, or I'm sure our folks on stage can probably see the question as well. So we'll try to answer any questions you have. But really today, we would like to share whatever we've learned kind of building new businesses in the space or businesses in the category to help you and to inform what you might be thinking about and maybe to partner with you as well. So it's 12:03. Let's kick it off. All right, I'm going to share my screen here for just a second. And I won't be able to see all of our guests in a second, but all right, so we're here today to talk about leveraging technology and short-term rentals. There's a bunch of types of short-term rentals that we're going to talk about today to transform portfolios. And we've got some amazing folks here today. So for a little bit of framing, as we likely know, since we're all here on the call, there are new hospitality models emerging everywhere, and they're impacting a whole bunch of different asset classes. They're impacting hotels, multifamily, apartments, single-family homes, et cetera. We're going to hear about a bunch of those models today. And I think the really interesting thing is that COVID accelerated everything. That means there's big teams, big investments coming into the space across the stack. We might talk a little bit about this today as well, but suffice to say, I've been working in the category for 7.5 years. I think it's the most exciting time I've ever seen in terms of new models emerging, real adoption from consumers, and investors ready to help people expand their portfolios. We have 3 focus areas today and experts that we brought together to talk about all this. So we're going to explore in some ways how to shift fixed costs to variable costs. It really allows you to think about new types of hospitality models. So we're going to talk a little bit about that today. We're going to dive into, most specifically with Cindy, but others will share ideas as well, leveraging home sharing to drive asset value. And we're going to talk about unlocking new types of hospitality investments because of the changing kind of demand from customers, changing technology, changing service models. There's all these new type of investments that are possible that we want to share a little bit more about. Who's joining us today? We have folks who are experts across the board in everything from technology, operations, hospitality, branding, investments, et cetera. We're going to talk to Emmanuel, Cindy, and Andrew Gaucher. And Wheelhouse, we get to host. For those who are new, Wheelhouse is a software platform. We enable people to run automated dynamic pricing. We help people understand travel patterns based on market reports and comp sets, help them understand their competitive set near them. But we build software to empower the short-term rental space. We're known for being easy to set up, customize, and automate. I'm not going to spend long on this. Some of you do know us. But we built everything we build, all the software we build is built on top of a really cool dynamic pricing engine. And really the way to think about this is travel patterns are changing. The guests who are staying with us are changing. The length of stay, kind of the time they stay with us is changing. So Wheelhouse has built a model to try to understand how all these unique hospitality offerings should be priced to maximize revenue from these assets. So now, without further ado, on to the show. We're going to do quick intros. Andrew, would you please kick us off? Tell us, and if you could, I'm going to stop sharing my screen. If you could share us a little bit about your background and maybe what you're focused on.
Sure, absolutely. So, Andrew Gaucher in Kelowna, British Columbia. I've been in the industry for about 12 years. I started my first company in the industry was a green construction company while I was doing my undergraduate degree at University of British Columbia. Over the following decade or so, I got more into land development. And now we are a vertically integrated boutique land development company. We do construction and land development both. A lot of what we spend our time on is watching innovations, both sustainability centric as well as more broad and mainstream technologies. And we try and use our projects as a test bed or incubator, in other words, to incorporate and utilize as many of those technologies as we can in all of the built environments we do. So, we do office buildings, we do infill residential, we do greenfield residential. So, our core business is real estate construction or development and construction. But then, of course, like I said, we very much focus on how to incorporate sustainability and other technology measures into everything we build.
Love it. We will probably dive into some of the sustainability stuff at some point today too, but very fun. Cindy, take it away, please.
Wheelhouse Homes and Hotels. We are Airbnb friendly buildings, essentially. So our primary residential base is an annual resident, and then we let those renters monetize their home when they're not using it through home sharing. We offer that as primary residences, secondary residences, primarily focused in the multifamily sector. And we have just launched throughout 10 cities across primarily the Southeast United States. And we're expanding our model pretty aggressively in similar fashion to how hotels flag properties. We're taking that same approach with multifamily and really hanging our hat on that home sharing earned income opportunity for our residents. So you no longer have to be a homeowner in order to be able to monetize your home itself if you're a renter.
And how it can be expanded upon in just a minute. Manuel, the new CEO of JetStream as of yesterday. Congratulations. Former COO promoted to CEO.
Thank you very much.
Take it away, please.
Yeah, thanks, Andrew. Thanks for having us on this webinar. I was the CEO for 5 or 6 years. So yeah, today is a new day. Yesterday was a new day. I've been in this industry for 6 years, following a first career in building engineering. And I landed in this a little bit by accident through a friend. But JetStream, we really are a unique company, I think, in the space. We are our bread and butter, I guess what we grew up to do from the day one was to help typically multi-unit resort operators, so room type inventory, condo hotel, to access new to them marketplaces, Airbnb and specifically Vrbo from the get-go. We were the first multi-unit API with Airbnb in 2017. So we do the tech, but then we also do the services on top. We create all the content, curate the content, and we have a team of agents around the world and respond to all inquiries on all channels. So it's kind of a package distribution. So these resort operators don't have to hire more staff to do this, and all of a sudden they're on these new channels with no work. That's our bread and butter. Since we've had a long story, we've sold the business, reacquired the business through COVID. And since we've acquired the business, we really expanded upon this, where now we're partnering with all kinds of asset owners, from small single homeowners to large real estate investors. And we not only do a few channels for them, but we actually replace a whole part of their team. So we do all distribution on all channels, all guest comms, all content management, and we're really the technology hub in the middle that connects to all the systems. And that's what we're growing right now, and we're very excited about. I love it. And Emmanuel, I'm going to stick with you for a second here, because one of the things we've talked about a lot, and one thing that I think is important for folks to think about, is there's almost a new model that you all are helping emerge. And that is starting to think about, in the past, hospitality might have looked at a lot of the things they did as fixed costs. And it sounds like you all might be able to help people move costs, a lot of fixed costs to variable costs. Tell us a little bit more about that. I want to know how far you think that goes, how far you all can push it, but tell us a little bit more about how did you start this? What was the vision behind it? And what is it enabling people to do right now? Yeah, great question. I see this vision go so far, but it's a journey to get there. I think I mean, in business in general, we're always striving. I'm a mechanical engineer by training, so we're always striving for more and more efficiency. I mean, if you look at the classic roll-up strategy where people raise money, do a roll-up, and then they trim down the teams, centralize stuff, save costs. I mean, that's this nature of, I guess, business and capitalism since day one. So what we're helping, we're doing this in a way, we're not doing a roll-up, but we're helping companies save costs and save fixed costs. And I think COVID really put this front and center, because I think hospitality pre-COVID was probably coming off of the 10 best years in the history of humankind in tourism. So they're bloated, rich, lots of money, big teams, and all of a sudden demand dried up in 2 weeks by 97%. That's what we saw anyways. And all of a sudden you're left holding this expensive, heavy fixed cost bag where every hotel has revenue management in-house and marketing teams and distribution teams, and you're running your own technology and all of a sudden these most hospitality companies anyways have had to lay off significant portions of their teams. And now these CFOs of these companies are going, okay, well, the recovery's happening. How do we rebuild this business, but with less risk in a more potentially sustainable manner, where the next time there's a demand reduction, which doesn't have to be a global pandemic, we're not stuck holding an expensive bag that puts the business at jeopardy. So that's kind of the thesis, and we're seeing it resonate. We're signing up new partners with specifically this thesis. Where I could see this going, so right now what we're doing for these partners is we're replacing the technology hub, we're replacing a 24/7 guest communications team, which most of them don't even have that already, so it's an add-on without having the cost of any of it, and we're replacing all the marketing and distribution and expertise. But we're still, and we will always continue, this is not the space we're going in, relying on very strong on-site teams for cleaning, maintenance, and in certain multifamily buildings, even just somebody there 24/7 if something happens to have a presence. In my vision, where I could see this going, I really see a future, and I think we'll get there, where everything's variable cost. So your asset owner, you have building, and now Jetstream and what we do is a variable cost. Your marketing costs are variable costs per acquisition, which we're already there on that part. Your cleaning costs are an outsourced contracting company that just comes in and does the clean. Your maintenance contractors are outsourced contractors that just are brought in as necessary. Perhaps your on-site person is not a contractor. And even insurance, we're now moving into the world of per booking insurance or protection, and that's already happening. That's tagged on to every booking, where your real fixed costs are super minimal and almost everything is becoming a variable cost per booking. That's the vision.
And tell me more about, from an asset class, can you do this on single family homes? Do you start a multifamily? Do you start a hotel? Like, where are you applying this today, and where do you think it goes next?
Right now, we're still feeling where the biggest pull. We got all these strings out in the marketplace, and we're seeing where the strings are going to pull the hardest. We have everything genuinely at this point. I mean, we have our traditional business, which is hospitality, resort operators, the large players in the space in North America and Europe are working with us. Some of them are already starting to acquire more inventory, and instead of staffing up, they're just giving us all of their distribution for the new stuffs. So that's the hospitality side. In the non-hospitality, in the kind of the real estate side, which is where we're all here for today, we have single homeowners, not many of them. That's one space. It's a bit crowded. There's other players in that space. We have real estate developers who build an asset and they just want to keep building more assets to get a return, and they're just looking for somebody to do what we do. And then we have institutional, like even larger investors that are doing the same thing, and they're coming into the space because they see there's money to be made, either as a long-term rental or as a short-term or as a flex, and they're looking for a solution to manage this for them or to run this part of it for them. So we're covering the breadth right now, and we're actually seeing a really interesting new space, which we're really just scratching the surface, which is what we're calling the service companies, the home care companies, the cleaners, or the home watch companies. And these guys actually have the relationship with the homeowners. They're the boots on the ground, first in, first out after a booking and this and that. And by partnering with us, all of a sudden now they're a property management company. So we don't know where the big pull is going to happen. We have ideas, but I'm not going to share them yet.
Yep. If I can add to that, actually, being that our core business is truly multifamily, everything that Emmanuel just said really resonates strongly with us. COVID accelerated this automation and kind of this touchless and contactless solutions, but it transcends almost everything that we do. So to Emmanuel's point of creating this variable cost model, the more usage, the more you spend, but the more you make, right? But at all of these times, we're really lacking that compression, that demand from the supply side. Then we don't have those fixed hard costs and people in place. So I think that from the multi-family institutional perspective, and this is from the top down, us as operators at the ground level, we're trying to find that really strong balance where we've got to service not only our annual residents on a traditional 9 to 5, but now they want to do self-guided tours, and we want to give them access to common areas and to their actual apartments themselves so that they can tour and lease. 90% of all leasing activity can be done, or 100% of it really can be done digitally, but 90% of the behavior from the time that they see that lead at whatever ILS it's delivering to them to the time that they sign that lease with us is completely contactless. Now, services like the 24/7 communications done on the back end are what really enable us to provide those types of services on a 24/7, 365 without having the burden of staffing up. Traditional multifamily operators only open Monday through Saturday, 9 to 5. But all of the leasing activity, like 60 or 70% of leasing activity, takes place after 8 p.m. That's when the people that have jobs that are looking to lease apartments are actually doing it. And yet our office hours don't accommodate that. So the facilitation of this back end is absolutely crucial for an expedited lease-up process, resident retention, concerns, maintenance, all of that stuff. So I think, what Emmanuel and his team at Jetstream are building is absolutely critical for both hospitality and multifamily. We happen to be the hybrid of it, but 100% we will be applying that to our annual
I think it's great. What I also
lease-up process.
With the advent of Airbnb, I really think like the barrier to creating a hospitality brand lowered in the sense that anyone with a camera and an opinion could create their own brand. But scaling that brand is really different. And it sure seems like Jetstream can help with that. So we're going to dive more into that. Cindy, thanks for jumping in because I want to turn to you for a second. And I think folks on this call might have seen there's been a little bit of press recently about Orion House. There's a little bit of buzz going on. And I think what I'd like you to do is share a little bit more. Why are you all getting coverage? What's the story you're sharing? Tell us a little bit more about home sharing and how you're bringing it to buildings and to folks everywhere.
Thank you for that. This actually goes back to the root of why we got into home sharing in the first place. Me personally, I've been a host on Airbnb since 2011. And I used that tool as an entrepreneur, both from the traveler's perspective as well as the host perspective, to enable me to launch my businesses, fail, of course, right? So there's that inconsistency, feast or famine. And in the times when I was really struggling, or I was raising capital, for example, I wanted to be able to monetize my apartment in New York City, which I was paying thousands of dollars a month for, that I was not really using heavily to help offset the cost of my travel while I was out in Silicon Valley or San Francisco, wherever I was raising capital. So not only did it help me monetize and finance the travel, I was also able to then stay in an Airbnb at a much reduced rate from a hotel at that point. And this goes back now to 2011, so almost 10 years ago. But when you start seeing it in commercial applications, the one-offs is where Airbnb has always been really successful because those homeowners have the autonomy in most cases to choose what they want to do with their home. Now, in a commercial environment, in multifamily, almost all leases preclude short-term rentals or subletting. But there's really no reason for that other than the fact that there's security concerns and risk about having transients in the building. There's no protocol in terms of how to kind of manage it. There's tax and compliance and zoning issues, and there's no upside for a property owner. The way that we've approached it is said, okay, let's take away all those friction points. Let's say in an ideal world, you don't have to worry about the transient nature impacting the quality of life of your resident. You don't have the exposure on taxes and compliance and noise complaints, et cetera. And you, as a property owner, actually participate in the upside, the earning potential of a nightly product versus just your monthly rents. Once you lease up your 300 apartments, you can't make any more money. 99.7% of all income earned on multifamily is from monthly leases. It's not from parking. It's not from tickets. It's not from fines. It is almost exclusively on that monthly rental. Now we're giving them an opportunity, property owners, an opportunity to make additional income off of that same square footage. So you've leased it first, and then they get a cut on the nightly income. So if it's $100 a night, they'll make between $12.50 or $25 a stay, depending on the market. And that really moves the needle for them. Now, by automating a lot of these services, we don't have to officially turn into a full-scale hotel, because it's not like 300 rooms at any given time are actually going to be out there and operating. You have 300 residents, maybe 10% of them make them available this weekend, or 20%, for periods of compression, holidays, New Year's Eve, music festivals, whatever that is. But at that point, then we can accommodate through a variable cost model our service providers coming in there. And it's everything from the cleaning to the maintenance to get those units efficiently turned over. And so it came from me experiencing and using Airbnb and having that great positive benefit, and then looking at an opportunity in a commercial fashion that says there's no reason why we couldn't do it. But the question was, how do we do it? How do we maintain the integrity of a residential environment? And how do we also offer these great experiences to travelers at a modest price? And that's
obviously going to dive a little more into that too. And I think what I get excited about is you've got flexible operation models emerging. You've got flexible utilization of assets emerging. Andrew Gaucher, turning to you for a second, what does this all add up to? Tell us, you're investing in hospitality offerings. What are you seeing? How is this changing your landscape of how you think about investments?
Well, not to start off on too philosophical of a note, but I do think what we're talking about today is a subset of a trend, or many trends that as Cindy mentioned, COVID is just expediting, really. If you zoom out, there are very few industries that aren't looking at moving fixed cost to variable cost, and whether that's buildings and real estate, like we're talking about today, or whether that's portions of your team. So, what we're doing as a land developer, we're looking at these different tools, and in specific in regards to hospitality, we're looking at them and saying, so instead of building a hospitality suite, i.e. bodies in the office, how much of that can be automated with technology? We're a traditional land developer. We do a lot of construction, but we don't have a in-house property management capacity today, or expertise today, that we are able to subsidize with technology. So, working with different tools, Manuel's firm is one of them that we've been talking to. We're looking at moving into short-term rentals, for lack of a better term, an Airbnb hotel, that, is usually required to have a whole back end, a human resources component, and we'll be able to move away from that. So, there's different ways to subsidize our offering. There's team improvements, so different technology that we can incorporate to help our team, or to offset needing new bodies in the office. And then there, of course, there's also customer improvements. So a lot of these technologies and innovations are really bridging both of them. So not only do they help subsidize what our team's doing or able to execute on, but also able to create a better customer improvement or customer experience. We also have office products, and while today we're talking about a lot of resi stuff, I do think that as the whole, who knows who's going to go back to the office, and are we going to need more space? We're going to need less space. Are there hybrid uses? I do think that what Cindy's firm is doing, I think we're going to start to see that in the office space too, where landlords. I mean, even today, I'm in my office. We have probably about 50% occupancy at any given day. Our teams come in about half time. But what's wrong with also getting higher and better utilization from our own office space as well? When there is an empty boardroom, I don't know about you guys, our boardroom is empty like 90% of the time. Why couldn't that be utilized? So exact same premise that Cindy's talking about with apartments. I think there's a lot of opportunity in the office sector as well.
I agree 100% on that, Andrew. In fact, I think we're seeing already a lot of rezoning and re-permitting in really dense cities like New York, because that is a massive issue. Not only is it impossible to collect rent from these companies that are actually constricting at this time, and they've already made that big investment, that capital investment to get their workers set up at home. They're not coming back to the office, either in the short term or sometimes permanently. Like, we've been trained so well to work remotely that like the efficiencies are there, the quality of life is there. You don't have to worry about the commute and all of the stress that comes into that. I think we're going to see a lot of that inventory repurposed that used to be very, business district specific, that you're going to start seeing that commingling. We hope to benefit from potentially acquiring some of that inventory. So, we've been talking to big developers and REITs that have that inventory that they're trying to figure out, what are we going to do with this? We've got these multi-million-dollar leases, and these guys aren't coming back. They're not renewing. Like, behavior's changed. Now, the pendulum swung really far, right? Because we were told, oh, you can't go to work. It's going to swing back a little, but it's never going to go back to 100% of the workforce is on site. That'll never happen. People are taking reductions in salaries, they're relocating, and they're saying, my quality of life is so much better that I'd rather either lose my job, get demoted, or go somewhere else versus having to be tied to that office Monday through Friday, 9 to 5. And so you're absolutely right. I think that monetization of real estate, that cubic foot can be utilized so many different ways. Why can't offices be something else at night outside of office hours? Why can't we be renting out our boardrooms that go largely unused? But all of the stuff that we're seeing, I think the sharing economy, starting with cars and scooters and bikes, it just continues to transcend every vertical, every industry, and every demographic. It's no longer Gen Zs and millennials. We're almost 20% across the board of adoption from 25 to 35, 35 to 45, 45 to 55, and 65 plus. Over the shoulder, these guys are going, wait a second, I'm on a fixed income. And yet my kid, who's 30 years old, has got 2 vacation homes. He's spending the summer in Mykonos. Like, he's driving a Mercedes. What is happening? And so those guys are going, I need to get in on it. Like, really, know?
It's the sharing economy is an apt term, and I think it's even moving into ownership. And what I mean by that is more and more you see different companies cropping up that are even fractionalizing ownership. So while I guess ownership will always be fixed in a certain sense, breaking it up, I think more and more over the next 5, 10, 20 years, you're going to see the fractionalization of everything for different reasons. One, from an investment perspective, it's increasingly hard to, in your rock star metros to get into the market of ownership in any sense of the word. But also, it also allows for flexibility. If you own, 1/20th or 1/100th of an asset, you're going to be more apt to own multiple assets, but B, also trade and move between those assets. So while we're seeing the sharing economy and sharing the fixed asset, I think we're also going to start to see more sharing of the actual ownership of the asset.
It's really fascinating and important for people to understand. Yes. Andrew, you said that you could launch kind of a hospitality co now without a ton of experience in hospitality. Meaning there's a whole new set of inventory that's going to be able to come over to the short-term rental space and be well managed and deliver a great hospitality experience. And Cindy, you mentioned that you will be looking at kind of commercial buildings and maybe bringing them over to a model as well. And where I do think like what's really important for folks to understand is like, because institutional capital is coming on into the landscape, because there's these new models emerging, because there's ways for less experienced people to build really successful businesses here, it means the supply landscape is going to change dramatically. It's going to change dramatically. And I think it's really important for folks to understand, like think through your own business, as supply grows, what becomes your competitive advantage? Because I do think supply growth is going to happen everywhere. It's going to happen on multifamily, it's going to happen on single family homes, et cetera. So something for us to keep an eye on. Anyone has some quick thoughts on how they see the supply landscape evolving?
Yeah, that's a really interesting context because, if there's one constraint that as a land developer we constantly whine about is supply. Right, and supply is traditionally constrained by regulators, and for other reasons as well, but primarily through regulators. So, Andrew, what you're referring to is bringing on new supply through technology and repurposing, as opposed to the traditional argument of just literally more supply through ground up. For sure, new supply will call it increased competition, and like you said, what's your differentiator in that? If in that being the case, I think initially new supply, call it through repurposing or through technology or through just higher utilization, which is what Cindy's doing. I think initially it's just going to get sucked up because there's so much demand right now, and that's one of the reasons why we have seen prices in most Western economies just go crazy for fixed assets over the last 24 months, is because of the supply constraints. So I think initially it's just going to get sucked up because there's so much demand right now.
And all of a sudden saying, hey, you could hire back all of your staff, or you could go with this new variable model. However, do you think the variable model, loaded question maybe, is it more defensible? Is it kind of safer to invest in variable in kind of systems,
yes,
whether it's technology or operations that allow you to have that variable model? How do you think that plays out, not just during COVID times, but the rest of the time for all of us?
That's a fantastic question as well. I think so, for sure. I mean, it's a more sustainable and safe investment to a scale. I think there's a point where, I'll take Marriott. They're probably not going to move over to the variable jet stream model anytime soon because they have the capital and the revenue to sustain internal teams. And so what's it? For homes and villas, yes, absolutely. For the distribution side of it, but they still have internal teams that are doing a lot of the work. So, but I'm saying, but from the small to medium, and medium is big, medium is very big. It's from the small to medium, or new entrance into the space. I think it's a much safer to go with a variable cost model. A, because it's less financially risky, but two, there's an expertise, the technology expertise, the content expertise, the relationships with all the players that are developed by a company like us or others like Cindy's company that are developed over
it's
time.
Almost like you're saying
you're buying into that, but really just on a pay-as-you-go model as opposed to a fixed. Or else you got to pay the money for the fixed cost, and you got to learn all the parts of it. That's a tall proposition.
I think it's pretty.
Hold on, I have a couple of things I want to add to that.
And more competently.
So interestingly, we have enormous inbound from hotels that have not been operating at, a traditional performance level. And they're looking to us saying, if our average, like a good performing hotel, the average in the United States is occupancy of 72%. So that means that 28% of that inventory is going unsold all year at all times. So they're saying, what can we do with this? How can we actually make more money off of it? And now, because vacation rentals are actually really impacting the demand on the hotel side, and that was just exacerbated through COVID, but I think it's a kind of a natural shift that was taking place anyway. They've got more and more inventory that just remains unsold. So that it costs them the utilities and the staffing and everything to keep those unsold, unoccupied rooms. We're looking at repurposing those and turning them into micro apartments so that we've got more inventory on the rental side of the equation. During times of compression, our residents can go, oh my God, I'm going to leave during, the CMT Music Festival or sports events or whatever it is and take that opportunity to monetize it. But for the balance of the year where you don't have that compression, the other 80% of the time, we've got more affordable housing available to them. So I think when you go to space utilization, there's a lot of solutions for it. And I think we're going to be really surprised to see how quickly the Marriotts jump on board. They've got their toes in the water, and they've invested in a bunch of different smaller, more nimble startup companies to kind of pilot different things like that. I think Starwood Capital is probably going to be the most aggressive. We know that Brookfield and Blackstone are all very aggressive in the space. Radisson happens to be, in it as well. So I think, if they figure out how to take that dormant 28% and monetize it, you're going to see a massive, massive conversion of underutilized inventory. And I had a comment also on the supply of things. I think the supply, that we're going to create by space use optimization is going to impact us positively in a couple ways. One, when it comes down to what Andrew was saying about, the limitation on supply comes down to land use and zoning and the government determining, do we want to extend this, add more density, whatever those issues are going to be. But if you're creating the additional supply in tandem with the delivery of the new residential units and hotel units that are also being delivered, I think we might see a positive impact on prices, quality of living, and affordable housing, which is what the masses really need. They need access to more affordable housing, and I think that supply can work for us really beneficially, not only just optimization of space, but hopefully that monthly rental or mortgage expense that they're spending right now, that ratio to income should come down beneficially to benefit us all. I mean, I'd like to think that being smarter with our resources, and also from a sustainability perspective,
Yes.
like we don't need to ignore the renovated or underserved property, or the older underserved properties. Let's renovate them. Let's get them back up and running, and let's take care of all of these dormant assets that are sitting out there anyway. So I think if we are smart as a race, we can actually deliver more supply, optimize those spaces, and give a more equitable distribution of wealth to the sense that they can afford a quality of living, that minimum wage right now
I think it is like
afford
we
most,
can
at least
certainly
in the
gain
United
efficiencies, and of
States.
course, building new supply is really, really hard in a lot of places right now, whether it's due to available labor or cost of goods. So I do think the repurposing benefits a lot, and the way y'all are utilizing space is really cool.
Yep.
I was going to ask you that, Cindy.
Yeah.
Is that how you see that playing out? Like, so in a certain sense, during those surge periods of the year, like, where I am, it's always the summer, everything's over capacity. Do you start to see, call it landlords or owners of any asset, do you start to see them almost underwriting at over 100% occupancy? What I mean by that is you might have a base lease of, say an annual lease. And then, like you said, there's a bit of a profit sharing model where perhaps your long-term tenant is gone for the weekend or the week or whatever, and then it gets leased out again. So those landlords or those owners are actually going to see over 100% occupancy during those times. And like you said, hopefully that carries on and can actually lower the affordability or the price
right now,
of the base lease.
I don't foresee that, and there's a couple of factors that play into it. Because hotels performed so poorly and weren't able to keep up with their expenses and mortgages, et cetera, when something like a pandemic occurs or a natural disaster, any of those things, and they're gonna continue, right? There's always going to be that volatility. The underwriting, and we work actually with both our development partners as well as our portfolio owners and REITs and whatever on the underwriting process with the financial institutions, both equity and debt. They rely exclusively at this time on only the multifamily rental income. So they are not assuming 100% or more. They're still assuming the 90% or whatever their market average would be on that underwriting. It is financed continually at multifamily. Now, I think once you have enough historicals in there, call it 5 years or 7 years or 10 years, and those institutions are really confident in those numbers, they will start financing it differently. But they did get get a little bit screwed. Apologies for my choice of words, but because there were a bunch of defaults on those big master lease deals, and it could have been anybody from Sonnet to the Guild or WeWork or those guys, anybody that was really basing it on, the travel and office space. They just got left holding the bag, and yet they didn't get the relief on, the mortgage on the lender side of the equation. They still are responsible for paying that mortgage, even though their tenants are not paying them. Multifamily was a little bit different because we did have a lot of subsidies in the multifamily space where they were giving the rent concessions and things like that. But building owners where there was a moratorium and people simply weren't paying their rent, that didn't relieve the obligation on the debt. It maybe gave them the inability to service their debt. But the banks are going to be very, very weary for years to come before they're going to give the benefit of that optimization of space. I think they're going to enjoy the benefits right now, but I don't think the underwriting is going to change anytime soon.
Got it. I love your model, Cindy. I think you're really impacting bringing more affordable housing to the market. is what the world needs more of. It seems like everybody's trying to take long term and put it into short term.
Yeah,
It seems like you guys are partially moving some short term into long term or flex model, and that's what we need a lot more of.
Facilities, but I think, Emmanuel, you really nailed it for us. Like that's not only my passion, but I think it's the most financially judicious approach. Like there's this inventory out there. Let's figure out how to use it. And it's been ingrained to me, from my childhood and as an entrepreneur is, how do we stretch that dollar further? How do we take those resources and share them and stretch them further? But we're very much driven by creating more affordable housing and a better quality of life for everybody.
I know. And I've got all these questions I want to ask you all, and I really have time for one. Okay. So, and I'm going to modify a little question, which is, I'm going to modify a question that I prepared a little bit, which is, for all of us, when we're bringing a new model to
okay.
market,
I feel like we're just getting started.
The reason why this won't work, the people who don't understand it. I want you all to share, what's the elephant in your room when they're evaluating, should we use Jetstream to help change fixed costs and variable costs? Cindy, for you, is home sharing, whatever questions they ask. What's the elephant? What's the misconception that you most often hear? And help us understand that misconception, why people are wrong about it, so we can understand how leveraging one of you as a partner might be able to change our business. Holy smokes. You, Manuel.
Yeah. Who goes first? Okay, I started. Yeah, I just launched into that one. So the biggest misconception we hear, and that's both our existing business, the resort operators who are just looking for additional distribution, or the new, even more in this world, is, the existing businesses, we can do this ourselves. We already have our teams. We'll just get them to do this ourselves. We don't need the help with this. And it's the same on the new side, on the other side. Not for the larger. I think when businesses get to a certain size, they recognize what's our core competency, what are we skilled for, and that's that. And we want this. Okay, here's a player who can help us win. But the smaller players, there's a certain passion about wanting to grow a business and do it all yourself. And I could do all of this myself. And that's the battle I think we're running into. And I guess the response, what I love to, and I try to explain, is like, imagine yourself now with 20 properties. Or 30 or 40 properties. Like, what's you as the property manager or the person who has a vision of creating a hospitality brand in the industry, what's your skill? Like, where is your time best spent? Answering guest queries at 2 a.m, or
Great
going
answer.
and signing up
Cindy,
new deals and getting more inventory?
Take it away.
That's separation of labor. I try to drill that in. You guys do what you do best. We'll do what we do best. And together in partnership, we're going to crush the space. But there's still a lot for the smaller players, I'll do this all myself.
Well, I was going to say, I think that's a mental block for entrepreneurs. Like, I mean, as an entrepreneur, you start a company, and to a certain degree, you get so in the mode of when somebody doesn't do something, or there's a problem, you jump in and you just fix it yourself, right? So sort of coming back to the core question of how do you handle these risks, and how do you handle moving on? What we do is two things. One, we do them ourselves, and what I mean by that is a lot of the times, if I was we also build custom homes for people, and those people who are doing custom homes, they're way less apt to take that risk themselves. So we put it into product, and almost all the time what we find is when we take the risk ourselves with a sort of a completed product and then take it to market, what we thought was a market risk is actually was entirely in our minds. It was a block that we thought, well, what if the market doesn't accept this idea? And in almost always the reality is it was us that was concerned with doing something that the market is much more apt to be accepting of. And then of course the other way of outside of doing it yourself is just doing it on a smaller scale. So for example, one of the projects we're looking at getting in doing, like I said, an Airbnb hotel, and it's a small one. It's just a 20 unit or 18 unit hotel to start with. So start small, break off a bite-sized piece, and then have a plan B. So for example, in that case, my plan B would be to stratify and sell those. Should I run it for 5 years and it just not be operating the way I'd like to see it?
Okay, love that. Cindy, I know everyone understands home sharing. There's no risks at all. Super easy. What do you hear? How do you answer this question?
Absolutely.
Oh my God. Well, I am like a salmon swimming upstream most of the time. The consumer wants the product. There's massive, massive consumer demand, both from the renter's perspective as well as the traveler's perspective. I'll tell you where I hear silence on the other end of the phone is from the real estate owner perspective. And they go, well, I would never do that. I would never let this, somebody else sleep in my bed. Well, first of all, you're the 1% of the 1%. If I'm asking you for $100 million building, it's because you've got a lot of money to begin with, and you don't need this product. And the likelihood of you utilizing the product is probably pretty low. So I think it's, the men with the money at the top are the ones that are making the decisions that then filter down to the renter at the $1,500 or $2,000 or $3,000 a month. Those guys are never living in those communities. They don't understand the cash flow issues that maybe most people encounter. So taking them out of their own shoes and saying, think about the 99%, think about your customer, think about your renter, think about your resident who really is paying your mortgage. He's having trouble paying his rent. Do you want to secure his rent further by complementing his earning potential? Like, that's a good thing for you. That's the biggest issue that we encounter. And then the second biggest issue is the safety concerns. Oh, well, I don't want to live in a transient building. Like, I don't know those people next door. Well, guess what? When you're staying in a hotel, you definitely don't know the people next door. There's 1,000% chance of that. I don't want to sleep in somebody else's bed. That's what you're doing at the Ritz-Carlton. Like, there was 3,000 people that slept in that bed before you, and it's so, it's getting over the fact that the check writers aren't necessarily the users. They're the beneficiaries, but they're not the users. And, getting them to understand you're probably not the guy that's going to let somebody come into your home. And you're probably not going to go and stay in somebody else's home unless it's a 10-bedroom house in Martha's Vineyard. Like, we get that, the $75,000 monthly rental. Okay, we got it. But the nightly rental thing is an issue. But that's the biggest thing. Like, the guys that are on the ground, the ones that are working in the buildings, they all love it in multifamily. They all get it in hotels. It's the man at the top that's writing the check. And I say man because 8 out of 10 decision makers are still men. And they just don't need the product for themselves, but they're coming around and they're going, wait a second. Okay. So I can not only make more money on my asset, but I can also help secure the collectability of my rent. Like, those two things make a lot of sense for them. And then they can kind of get over the rest of it.
It went too fast. So much more to cover all. We'll toggle back just to cover kind of in summary what we were trying to do today all. And hopefully you had fun. Hopefully you learned something new. We wanted to introduce the notion that there's new ways to shift fixed costs to variable costs that allow you to think about what you can invest in and where you should invest in growing your business.
So much more.
That are really, really interesting, right? They help businesses scale. They help new businesses more faster. I think it's really important to know about. We talked about leveraging home sharing, and obviously we could have done a deep dive on that, an hour just on that alone, but it is really interesting, especially on the multifamily stack right now, to see this so broadly coming. And Sydney didn't share the numbers that I happen to know about how many people are signing up for the product, but it's a phenomenon and it needs to be understood. And third, we heard a little bit from Andrew, who, if you dug into the work that the G Group is doing, they're developing amazing new hospitality offerings where you really couldn't do it before some of this technology and service layer was evolving. So hopefully you had fun and you learned from some of these folks. If you want to reach out to any of our guests, here are their emails. Otherwise, thank you all for joining today. Super, super fun. But thanks so much. Thanks so much. And we'll have to do it again. And if anyone does have questions again, please follow up with us. We'll point you to the right folks. And this video will be shared out. It'll be on social. It'll be, if you joined us today, or for those who signed up, this will be in your inbox in a little bit. And thanks for making time on what is always a busy week. And take care, all.
Yeah.
Excellent. All right, all. Be well. Bye.